Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked with a daily Forex market analysis for you for January 2nd, 2020, for the first trading day of the new year, the new decade, all starting off soon. So with that, we want to just jump to our disclaimer real quick to remind you that this webinar is for illustrative purposes only. So now we're going to go to our live action screen here, which is we have the www.forex-trading-unlocked.com website, and if you look at the top of the website, you can see the menu bar, and there's a workstation button. We already pushed that, and we have the workstation page. Now we have some numbers that are coming out. Let's see, but as far as really what's going on for Thursday and Friday, there's really not too much going on except for ISM. Yeah, there's the ISM and the PMI for the US, and there's a PMI for Canada also. Those could actually, since we're coming off of holiday markets, might stir some stuff. Then we have CPI for Germany on Friday, as well as unemployment for Germany on Friday. We do have some numbers that could affect the British pound as well. We have CPI also on Friday. And then we have some commodity numbers that will be also coming out on Friday as well. So that being the schedule for those 2 days, nothing really too much, but there are a couple economic numbers, especially if they stir the interest rate market. Then the currencies might start to move. So we already have the dollar index chart to show you how it ended the year, and as you can see, the dollar index ended in a very bearish way. Right now the market is in a bear trend. You can see the downward sloping resistance line here, this blue line, and this first pivot here at 97,833. This is definitely our directional downward bias right now. And with this trend lower, here is our high. You can see we have a progression of a lower move low, a lower move high, lower move low, lower move high, and then we ended the year with another new low right there. So, and this ends the decade as well as the month, the quarter, and the year with newer move lows for the dollar index. So the bear market is definitely there for the US dollar starting out for 2020. Does that mean that we're not going to get a rally over the next week or two? Absolutely not. We could easily have at least an upside correction, if not a turn of events. Who knows? But right now, it is a bear, and we're going to use that for one of our fundamental drivers for the other currencies as we start out the trading week, or excuse me, the new year, ending the trading week, and then we will be next week is when things will probably start to really kick into gear. So then, like I said, we have this 97,833 as a downward directional pivot. Below that, the market is in a sideways to lower pattern. Definitely could start to go sideways and buck up against this downward sloping resistance line before it starts to tread lower. And then we have this 98,558 pivot here for directional bias as well. Any rally above there, taking the dollar index to those levels again would probably be a very bullish indication that the US dollar is gaining strength, and that the dollar index is no longer a bear. So, but that is probably not the case, because on the monthly we had a bearish engulfing sell signal back in October, which is hard to see with this because of the daily stuff that's covered here. But you can see right here where there is this big red line. That was the month of October, and that turned out to be a sell signal for the dollar index, which, as you can see, the market, when it's here, up here, was when the market topped for the dollar index, and since then it's been trading lower into closing out the new year. So before we talk about the dollar index anymore, we're going to go to a currency pair and start to see what this is doing as far as dollar weakness. Dollar weakness is definitely helping to drive the euro US dollar rally right here, and as you can see, the market is in an overnight. The lower upward sloping blue line here is a very nice sloping support line for the trend. It's very mild and something that the euro US dollar can easily follow along for months on end, just gradually creep higher. You can see that the last week or so we had an explosive rally and a very nice big move to the upside. That was also due to probably holiday markets being thin, and as you can see, the slope here for the current upward trend, it's a little bit steeper, but even this one isn't that bad. So the last few days of the trading year, they were a little bit steep, so we might see a little bit of a pullback as the markets open up and finish out the week. But you never know. This bull may rage up to $1.12 half, $1.13 even before it looks down. So right now our first pivot is up right here at $1.1205. I'll trade. It kind of keeps this market in a very bullish posture. I'd be very careful selling it up in these levels up here. You could still have another blast higher before it starts to actually do a pull retracement. Anywhere trading below $1.1205 still keeps us in a bullish posture as long as the market stays above the lower blue line. That's still, like I said, sloping at a nice pace. A failure here would then have us at this directional pivot here at $1.1065. As you can see, this was the last higher move low. A failure here would definitely take us off the bull trend, not necessarily make us a bear, but have us in a neutral to bearish posture at that point. And then we would be targeting this lower $1.0979 area right here. A failure here, that would be something I would say would unleash the bears and really start to pound this market. Now, for a lot of people, they might say that's a big move. Well, if you really look at the range here, there's not much of a range. We had a lot of activity in the last few days of the trading year. But outside of that, the euro's been in a very tight range for months on end. So as a whole, like we said, the US dollar index is under pressure. The euro US dollar looks to be in a buy break situation. Now we're going to pull up the British pound US dollar and see what's going on. Now remember when we talked about the dollar index about October with that sell signal, that has helped to drive, like I said, some of the major currency crosses higher against the dollar for the past month and a half. That bearish engulfing line is a very strong indication that the dollar index will continue higher or lower, excuse me, for probably the next 3 to 6 months, or at least stay neutral to lower. And with that, that helps to support this trend also in the British pound US dollar. That's definitely stronger than the euro US dollar. They have different political issues going on, so we have this kind of what is this, $1.30.21 pivot for directional bias for up and down. All trading above this, and especially above this upward sloping blue line, keeps this British pound in a very aggressive bull posture, targeting a challenge of this $1.3517 pivot right here, which would push brand new higher move highs, indicative and fundamental of a continuing bull market and strength. Only a failure here at this pivot here at $1.3021 would then have us pressuring this last higher move low at $1.2906. A failure there definitely has us pushing lower levels, but even still, that would have us in a more neutral, even though it'll be a short-term bear, still a neutral environment as long as the dollar index is under pressure. If the dollar index starts to rally again, that's a different story. If the dollar index rallies and the pound is under pressure, then you'll probably see a little bit of a extended bearish move in that case. So that's what we're looking at for directional bias right now. Now we're going to look at the US dollar Swiss. This one here just really kind of helps guide us with the dollar index. When the dollar is under pressure like it is right now and the Swiss has a violent move like this is a big deal. We have this pivot up here. This is right above parity. That was where the market had finally got rejected once again. Up here, we'll show you this little high right here. This was the last higher move high before this break started. And this pivot right here at 98 cents, 98.36 right here, this is a big directional pivot. Unless the market gets above this US dollar Swiss is definitely a neutral to bearish posture, and I would not try and catch a falling knife here, folks. This break could still keep on going. I would say down to another, what did I have the target at? I think at $1, excuse me, not $1, down to taking out this low here currently from Tuesday, and then targeting probably down to 95.70 before bouncing for maybe just a neutral trade before it really keeps on going down. Like if the dollar index continues to slide for the next 3 to 6 months, which is very likely, not necessarily a bad thing, it's just a corrective move to begin with, which would, like I said, would help to drive some of these other major currencies higher against the dollar, meaning the US dollar Swiss would target lower levels, maybe as extreme as the 95 down to 94 handle, with 93.25 was my big support area for any extended monthly type of slide, because at that point you're starting to push some really big barriers where even if the dollar index is under pressure, the dollar may gain against the Swiss a little bit. Just like it may against the yen, and that's one we're going to look at in just a minute. So we looked at the European currencies. Now let's jump across to North America and see what's going on with the U.S. dollar Canada. This market is also collapsing in the wake of a dollar index break. You can see that the market's been in a big choppy sideways to lower trade bias, but definitely over the past month it has just petered out, and the support has not held up anywhere. Right here we had a short-term buy signal. It failed. The failure here confirmed this bearishness for the U.S. dollar Canada, and also confirms the bearishness in the U.S. dollar index, because it seems to be that the U.S. dollar Canada and the U.S. dollar Swiss mimic a lot of the dollar index trading when there's extreme moves. Not necessarily right now. There's been a continuation of the trend in the dollar index and hammering it, the U.S. dollar versus most currencies, so that's accelerated its weakness against the Canadian dollar as well. This is all fundamental stuff happening right now, so as far as technical levels, it's hard to get a gauge. We need to see how momentum starts to where some buying comes in and things start to stabilize first. But like I said, don't try and catch a falling knife here. Just like you don't want to catch a falling knife there, we have some freight trains going higher. Look at this Australian dollar, US dollar, since it's broken out. See this little line here? This is our big up-down directional pivot here at 69.32. Trading above there, this steep rally that's going on, is it likely to have a little correction or sideways action? Absolutely. But it could still just keep on rocketing higher. Right now there's a lot of fundamentals that are driving the commodity business in Australia and are giving them nice outlooks for 2020 that were not there for 2019. There was a lot of misconceptions about how the trade deal was going to ultimately affect China as well as Australia, and it turned out that China has definitely not been falling down because of the trade deal. It's actually, they've been doing well in the wake of all that. So, in fact, all the economies around the globe have actually been benefiting in the wake of a U.S. and China trade impasse. So here's your big directional pivot. Once again, it's 69.32. Then we have this upward sloping blue line here. This is the lower one is the main trend line. A correction down and a bounce off of this is really likely, and it is probably a good thing to happen before it starts to really continue higher, because we need a lot more confirmations on what's going on globally and stuff. But even still, this slope here that's been trending right now, this higher, more steep upward sloping blue line, this is still not that bad of a trend. So if it comes sideways and bounces off this one and continues higher from there, well, then that definitely shows the momentum and the strength in the Australian dollar as compounded by the weakness in the U.S. dollar. So here we have these lower three arrows here, these three yellow pivot lines. If you take out this last higher move low, or this other higher move low here, which would be at the 68.35 cent level and the 67.96 level, these two pivots, if it falls down into this area, that's not the end of the world, because it would have it right by this upward sloping blue line. But any failure here from 67.96 will have it pressuring this low here, which is critical for neutral to higher bias for the Australian dollar, US dollar. Any failure from there, long term, would definitely signal a reversal of fortune for the Australian dollar, US dollar. Now we have the New Zealand dollar, US dollar. This thing is a major, major bull. So I'm not even going to try and figure out as far as any pullbacks or what have you, but we have some good levels here. For major up-down pivot, we have this medium line here. It's at 64.70. And we have this nice slope here, this upward sloping blue line, which keeps the market in a very nice upward sloping bull trend. Could it go sideways, correct back and bounce off of it, and then go higher? That would be something that would help the market to continue to go higher and make it digest these moves. Markets don't just go in one direction, and how they go up and how they go in is how they go out. So if we have a really steep rally that continues, then we're setting ourselves up for a big, big, big crack going back the other way for the bears. But anything can happen. Right now we have consecutive higher move high, higher move low, higher move high, higher move low, and continue. And right now the market ended the year on higher move highs for the month, and ended the month, the quarter, and as well as a decade with a nice positive close. So now we'll go to the U.S. dollar JPY and see what's going on with the U.S. dollar yen. Now this is the one market which is tough. Like I said, the U.S. dollar index is following a lot like the US dollar Canada and as well as the US dollar Swiss chart when the market really starts to sell off against the US dollar. The US dollar yen, however, because the dollar index has had a big move, we definitely have this nice little correction here with the Japanese yen, but it comes right down and touched this upward sloping blue line that's been going on for a while. Because the US dollar Japanese yen, while the US dollar index has been dropping, the US dollar yen has been holding an upward sloping bullish to sideways trend. Now recently it's run out of gas where it made lower move highs, and now it's treading on these lower move lows, which we all know when you have that indication, once you have lower move highs and lower move lows, that's indicative of what? A downward trend, a bearish trend. But right now I think it's more about sideways because overall the trend is up, so this could be just a correction. And the funny thing is that even if the dollar index continues to slide against most of the major currencies, the US dollar yen will probably get a bounce. Does that mean it's going to? Absolutely not. But if you look at all the of higher move highs and higher move lows before it butted up against this resistance and failed, the dollar index has been breaking during that time. So how is it possible that the dollar has so much strength against the Japanese yen? Well, it just happens to be. So we're not going to try and figure it out, but if the market does bounce off this upward sloping blue line, then I would have to say you're probably going to make a run back up for this pivot at 109,476. And this would be our big directional pivot, because if we get above it and we breach this downward sloping blue line, which is almost completely horizontal, that would indicate a breakout to the upside and a bullish, definitely very bullish US dollar yen market, which could be going the opposite way of other currencies. So right now the Japanese yen is not necessarily following all the other ones. So just because you see the British pound and even the euro having big moves now against the dollar, don't just think you start buying Japanese yen. I'm just saying that we're probably in a little bit of a divergence there at times. So and that's also good to know, because if this is true, then right now the US dollar yen is in a situation for a break to buy, where you would be fading that, where you'd actually be buying dollars there, and that's where you'd be getting some strength with the US dollar yen. So with that, we're going to go back to the US dollar, Euro US dollar. Now remember, we do the dollar index chart. We even showed you the monthly on that. We mentioned that sell signal from October. That was a high probable Japanese candlestick pattern. We've had for the British pound US dollar, we had a pattern that came out a week ago, and it already hit the target range. So it's possible that since we're done with the holiday markets, that we could have a little bit of digestion. I just want to show you this right now. Where the pound ended up, this is right in our target range from this buy signal that was set off. Remember I told you how the Canada failed? This one here is a 3 inside up, this low, and then the next 2 positive days after that. By that third day, that's a buy signal right there. It's a Japanese candlestick pattern called 3 inside up, and when that happens, it sets us up for a rally, which we did have, and the follow through came through on Tuesday, on the last day of the year, and hit our target range. Does that mean the bull is going to run out of gas? Absolutely. But it did help to bounce off this upward sloping blue line, which is nice, and now we have a guide for our trend higher. The pound US dollar, especially if the dollar index is under pressure, is most likely going to go higher. But like I said, we hit our target range, so we might be setting up to end the week with a little bit of digestive to even lower trading, with meaning dollar strength. So those are your key pivot numbers. The markets haven't opened up yet, so we'll be tracking that as things start the new year off, the new decade off, and we'll see what goes on. And if you want to learn more about those buy and sell signals, those Japanese candlestick patterns, you can do one of two things. You can keep following. You can like us, subscribe to us on YouTube, so you know when we're coming out with the videos, especially when we have the buy and sell patterns. Or you can read the book High Probable Japanese Patterns, available on Amazon.com in paperback and Kindle versions, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And you can use it in Forex markets, futures markets, options markets, stock markets. It's all in the book, how to use that and how to set up correlative trades as well. And if you want to also know what's going on with the Forex markets, you always check us out at www.forex-trading-unlocked.com. Go to the workstation page. You can do just like I did with your analysis, no login required, and start working on your charts, see what's going on, and get the news, and stay abreast of what's going on. Or I'll go to our analysis page, and then you can see our current videos if you're not following us on YouTube. But if you would do us a favor, we would like you to not only subscribe to us on YouTube, but leave some comments, because we follow up with the comments with other videos, and we'll go over even other cross rates. If you want to know about the euro pound or the the Swiss franc yen trade, we'll look at those and go over those as well. So look forward to 2020 and the new trading year. Hope you enjoyed your New Year's holiday, and we will see you tomorrow with another video. Thank you very much. I'm Teddy Keckstedt once again from Forex Trading Unlocked, and you can